Hello, I'm Tag,
And this is Bob.
and you're listening to Bob and Tag Talk. Before we start the show, I'd like to point out that the topics discussed on Bob and Tag Talk are for informational purposes only. So please don't take this as investment advice. We urge you to do your own research before making any investment. Alright, so today we're going to talk about another very specific international mutual fund called Mirae Top 50. Am I right?
Mirae Asset S&P 500 top 50.
Alright, okay. So yeah, please go ahead.
So again, like we discussed the last time, Mirae Asset is a mutual fund house, and they have these kind of, it's considered as fund of funds or ETFs, mutual funds, which are targeted to international markets. Primarily, this is a US market kind of play. So this, everyone knows about S&P 500. They're the top 500 companies which are part of the index in US.
Okay.
So there are two different main indexes or index plays that you can have in United States. That is one is S&P 500 and another is Nasdaq.
Okay.
So Nasdaq is purely like it's New York based, and then all the stock indexes are New York based. But Nasdaq is mainly of technology companies, and then other kind of new startups and emerging growth technologies which are listed in Nasdaq. The S&P 500 is more traditional index where you have a combination of not just technology. You have banking and finance, and then you have healthcare, and then you have consumer products, and then you have oil and industrials as well. The S&P 500 is like the largest 500 companies in the world, not just in US, but they're in the world. They're the largest 500 companies. So even companies with the top company, let's say in Taiwan, China, or Europe, their stocks will also be part of S&P 500 if their market cap is so high.
Okay.
So a lot of people are investing in this company. It will be part of the index automatically.
Okay.
So S&P 500 is one of the largest indexing that you can do. It's complete diversification across industries, verticals, and then the largest 500 companies in the best market in the world.
Okay.
That is the USP.
All right. Okay. So we saw from last time that Mirae FANG was primarily into technology-based
The top
stuff.
10 technology companies.
Right. This is more on finance, health.
It's a diversification among like top 50 companies.
Okay.
You can consider that.
All right. Okay.
So again, the similarities are always there because technology is kind of like 25% of the index of almost all indexes, minimum 25%. Sometimes it's more 100% and so on. So here also S&P 500, the technology largest, market cap companies are Microsoft and Apple, and then Amazon.
Okay.
And then there are also some semiconductors as well, like which we discussed last time, like Nvidia, and then Taiwan semiconductors companies and so on. So apart from this, like what are the highlights of this particular fund? Why would you want to go into this? So first thing is you will never get exposure to banking in Nasdaq or any other ETFs. So banking companies are really, really stable. Large banks are really, really stable, still stable now. So they have a large deposit base. They have a large subset of customers which are diversified as well. So there is no chance of, when people start to withdraw their money, the banks are still safe. And then the FDIC as an organization also trusts these banks as well. If there is any bank which has a problem, one of the large banks will acquire them.
Right.
That is one of the benefits we get in banking.
Okay.
So the largest banks are like JP Morgan, Wells Fargo, and then you have Morgan Stanley, Goldman Sachs as well. All these large banks, they are also part of this kind of S&P 500 index. So, but the highlights of this particular S&P top 50 is that we are concentrating a little bit more. We're not bothered about the 450 companies which are small companies, but we are like trying to concentrate on really stable companies. And the largest banks are JP Morgan and then Wells Fargo. And then we have a lot of financial related companies like MasterCard and Visa as well.
Okay.
So they are not exactly just banking, they are also into consumer side as well, because credit play, basically they provide credit cards and they provide this kind of any transaction that go through any financial companies, it has to go through MasterCard and Visa.
Right.
They're the largest players in that.
Right.
And we have one kind of a different kind of player in it called Berkshire Hathaway. So this is owned by, again, majority is owned by Warren Buffett. And what are the advantages of Berkshire Hathaway is, like they invest, they're not just kind of investors, but they also own a lot of insurance companies as well.
Okay.
So they are primarily into the insurance business. We already discussed about Warren Buffett and Berkshire Hathaway in the previous seasons and episodes. So just to give an overview, eventually they started as a textile company, got acquired, and then they switched to investments, and then got Geico is one of their largest companies. So Geico is automobile insurance, and then they know the insurance industry really, really well. But as an insurance industry, the main thing is people pay you money for insurance. When they don't want the money, you get to invest in a lot of different things.
Right.
So LIC is one kind of company in India which does the same thing. So you buy LIC policies, people will buy different kinds of policies with you. So they pay you annual premiums. So you get all the premiums. The premium you have to pay them back only in case of large scale, large scale life losses or losses in kind of to floods, earthquakes, and things like that. Other than that, all you have to do is manage the money well.
Right.
So Berkshire is really, really good at that. So what they do is they invest in Apple. One of the largest holdings is Apple again. Apple is again part of that same index, which is the largest holding in the index. So I think Bill Gates is also part of the board of directors in Berkshire Hathaway. So they have exposure to Microsoft as well. Probably not directly, but indirectly. And they own a lot of oil companies as well. They basically are an index in themselves.
Okay.
So they buy a lot of stocks, and like they own Snowflake as well, one of the top companies in data mining and data related technologies. And then they own oil and industrials. They own a lot of monopoly kind of stocks where they own a lot of railways in US.
Okay.
And they own 100% of it.
Oh.
So there are only like 2 or 3 railway players in US. Those railways are used to transport commodities, and then they completely own that 100%. Some railway companies, and then they own companies like furniture companies, and then some consumer related companies as well. So Berkshire is like an index in themselves. They own a lot of things, and they are very stable. They have a lot of cash in hand. They are one of the largest. One of the only companies which has the largest cash reserve.
Okay.
They need to have their cash reserve because they are an insurance business. So they need to have a lot of cash reserves, but they have the ability to deploy their cash. And in the current market environment, we are getting a lot of better treasury rates. So with their cash, they will easily get 4 to 4.5% easily if they go long term. So that is one of the highlights in this particular. Berkshire is part of this particular thing. Berkshire is not part of the Nasdaq index.
Right.
And then just like the other highlights are like Exxon Mobil Corporation.
Okay.
So they provide oil, different forms of oil refining, and then transporting oil to different countries.
Okay.
And in the last 2 to 3 years, the oil prices have fluctuated a lot, and these companies have benefited. And now due to the wartime scenarios in Europe, so the oil prices are also high. So Russia is one of the main providers of oil. So if European countries are not going to buy oil from Russia, they need to buy with companies like Exxon, Chevron, a lot of other oil companies. They need to buy from them, and at high prices. Not just oil, gases as well. So gas is one of the main usage for Europe. They need this gas in winter times.
Yeah.
So because of the temperature fluctuations, they need this kind of gas. So their business is very, very stable. And there are not a lot of new entrants in these kind of fields. So whatever they're established players, they are the market dominant players, and then they have the unique business. No one can compete with them. So that is one of the advantages. And the healthcare plays also very nice in this particular S&P top 50. So you have like companies like that make vaccines.
Okay.
So like Merck, and then you have companies that make like essential medical medicines as well.
Okay.
Then AbbVie is one, Linde is one, United Health Group is one, like hospitals and medicines again. So it's kind of, you have exposure to these kind of companies as well.
Right.
So again, why we are discussing this, like this kind of a fund offers complete diversification. So you don't have to concentrate on only one vertical or one kind of technology sector and so on. You have different sectors. And again, hardware sector and chip making sector also we discussed. One of the really other interesting thing, there are technology companies in hardware as well, like AT&T, T-Mobile, and then Cisco in networking, and then there are a lot of other networking companies as well, small networking. So these kind of networking companies are also part of the S&P 500. In S&P 50, we have Cisco is one of the main players, that a lot of exposure to that. And then one of the really interesting things, like consumer discretionary products, so which we are all familiar with, like Nike, McDonald's, Coca-Cola, Pepsi. All these companies are also part of the S&P top 50.
Oh, nice.
So this is like an overall kind of outlook.
Right.
So again, one other interesting vertical is like this is probably the only company in that entertainment industry. So Walt Disney is the only one in here, but it's one of the large players in the entertainment industry.
Okay.
They own a lot of theme parks. They own a lot of Disney content, and they're also trying to get into streaming as things like that. The competitor to Netflix, one of the largest competitor to Netflix, and then there are a lot of other medical equipment makers and that part of the S&P 500. But here there are very few in the top 50. But at least we have some kind of diversification there as well.
So yeah, there's a lot of finance, a little bit of not a little bit, a lot in the insurance sector, healthcare, consumer related a lot there, and some niche luxury brands also are included in this portfolio.
So the percentage was one of the most, another USPs, if you go to, like, for example, one we discussed last time, it was the FANG index.
Right.
So each company is almost 10% part of that particular index. There are only 10 companies or 15 companies at the most.
Okay.
Here, it is like the top companies are like Microsoft and Apple, which are more than 10%, but all the other companies are 2 to 4%.
Okay.
So that is one, the main advantage here is that you're getting that advantage of diversification here. So even if any one company falls badly, the other companies make up, the other sectors make up their losses.
Right. So it's you can say it's like sort of stable over time also. Yeah.
And this is the only ETF and mutual fund in India that gives you the opportunity to hold some of the companies in S&P 500. It's S&P 50 index. There is no other mutual fund which provides this.
Okay.
This is the only one. And maybe there will be some new mutual funds which will coming up, but most other mutual funds which give you US stocks are mostly investing in Nasdaq, not in S&P 500. So this is the really unique thing about this particular fund house providing this mutual fund and ETF.
All right. So that was a detailed explanation about the Mirae Top 50 S&P 500 mutual fund
and ETF.
So yeah, I thought we could also talk about what is happening right now in
how do the world events affect this.
Yes. So let's talk about what is going on in the consumer sector, the health sector and the oil sector, what is going on right now and what we can expect in the next 6 months to 1 year.
So again, like why we discuss about the previous 6 months is just to understand all the rates changes that have been happening, the oncoming of probably expectation of a recession and so on, and how these kind of companies that are there, how will they be affected? And just to have an idea, like if you're going to investing, make sure that you're not investing and then immediately selling it or canceling the investment. You need to think a little bit about 6 to 12 month period, what do you expect, and what is the duration of your investment. Investing in these kind of funds or ETF, you have to take a long-term view, even if it's not a very long-term, like 5 years, 10 years, which is not traditionally long-term, but yeah, there's long-term in this kind of scenarios. But at least we can think about 1 to 3 year period and be planned for the other events, unpredictability that can happen, and how we can take advantage of it. So let's talk about the consumers first. Consumers also, there are like two different types of consumers stocks that are available here. One basic things like grocery stores, grocery chains, which are again part of this kind of index. And there are consumer brands like Nike, Pepsi, Coca-Cola. They form one group. And there are food-related items, and McDonald's also is part of it. And then there is something called Kraft Health, which is owned by Berkshire, Kraft Foods. And then there is also something called Kroger's, which is owned by Berkshire. So we get exposure to all these kind of companies. So starting with, let's say, Coke, all the food-related companies, Coke, Pepsi, McDonald's. Now, the past 6 months have been very stable for them. So these chains, they have been facing some headwinds. When I say headwinds, there's some difficulties in keeping, people keeping people attrition. They're facing a lot of attrition in their hiring policies. That they are, in the past 6 months to 1 year, they're being forced to pay a little bit higher for these kind of employees.
Minimum
people
wage.
Who work in, because of the minimum wage rules and everything like that, and because of inflation as well. So as inflation increases, you need to pay people higher, or even if you don't pay them, then people will leave you and go to a company which pays higher. That is one of the movements happening. So these kind of companies are a little bit struggling with it. Small businesses struggle a lot. these kind of established players, they may be able to handle them better. And Amazon is also, again, one of the consumer products, one of them. They also face these kind of problems. And one of the recent problems that we are trying to see is government is getting more and more involved in kind of more oversight into how they are treating their employees, how are they paying them better, are they giving good health kind of condition, environment, health benefits, and so on. So their expenses for these companies a little bit increasing. So this has been happening in the past 6 to 12 months. But in the next 6 to 12 months, it will continue. But one of our kind of expectation is that, or general perception is that these are really established companies. They have a lot of cash in hand, a lot of revenue, so they'll be able to manage it. Compared to smaller companies, they'll be able to manage it better. So these are stable in that kind of way.
All right. Okay.
And if you go about the other companies like Nike and Apple, and they are unique products, and they are really products which are of high quality, and they have the ability premium products. So there will always be premium consumers, and they have this kind of advertising expenditures, high expenditure, and so on. So they'll be okay. So they'll be fine. For them, they don't have a problem of paying their employees and so on. So that problem is not there for these kind of consumer companies. The one issue that they have is generally due to high inflation, people might start to spend less. So instead of choosing a higher end of a Nike shoe, they may go for a lower end, probably. And instead of buying a high-end Mac laptop, you may just have to go for a lower end. But the advantage is their customers are really, really like their products. They will not go to any other company.
It's like more of the aspirational mindset rather than just I'll settle for anything.
Exactly. So that advantage they really, really have. And one really advantage is they have a lot of cash, so they can wait. They can even though whatever unpredictability happens, they can tide over this scenario, and after 1 or 2 years they'll be fine. So they have the advantage in that way. And inflation has a really, really double-edged sword, because one thing is it causes issues, but one other thing is it gives you advantages as well. So what advantage inflation gives with these kind of companies is the aspirational part that you mentioned. Because these products are aspirational, high quality, so if you increase the price, no one would mind. So if your Mac got expensive by $50, $100, people don't mind. Okay, fine, it got expensive. So they don't mind. So they're getting the high quality products. So you can increase the prices. But these kind of companies like Microsoft, Pepsi, and Coke, they may not have that kind of a margin to increase their price. They may be able to increase their price, but not by $1 or something. Maybe by just 10 cents, 20 cents. So that's a lot of difference in premium, and then when you have exclusive clientele, then you have this large-scale clientele. There's a lot of difference in that. That is one of the highlights in the consumer sector. The next is the health sector. And this is a very common discussion that a lot of people have had in the past 1 year, 2 years. The company that makes vaccines have the pricing advantage. But a lot of governments are forcing these companies not to increase the price of medicines. So at least in the US, there's a lot of discussion and so on. So vaccines are getting manufactured in Asia and then being exported. So they have a really good advantage. They manufacture cheaply. They sell at a premium or a higher rate. And then in kind of pandemics, they have the advantage. And they have a lot of products. I think we have discussed this probably in the previous podcasts or episodes as well. There are specific products like anti-inflammatory medicines. Like diabetes medicines.
Something that people take on prescription basis?
And allergy medications. So these are generally priced higher in the US. So people, because the insurance, most of the people have insurance, so insurance company will readily pay higher the cost for this. But if you're paying out of your hand, it is very, very expensive in US markets. So they have these kind of pricing advantages. So as long as there are insurance companies insured people, if they want to take medication, they will get it for free. Insurance companies will pay, and these kind of companies that make these kind of vaccines, any kind of specific medicine, specialty medicine, they have the advantage. So it's again a play on that. So a lot of medicine makers are there part of this SP50, S&P, top 50 in the S&P 500.
All right. Okay.
That is the advantage of health. And one of the largest, talking point in the past 2-3 years has been the oil industry. So during the pandemic, people were indoors, people were working from home, people were not traveling a lot. all the airline industry was completely shut down,
Yeah.
and the transport industry had a lot of problems. So oil prices were at literally low or almost zero at a particular point of time. So there were a lot of headwinds for these kind of oil extraction companies, oil refining companies, oil distributing companies. But since the Ukraine-Russia war started, there's been a lot of tightening in the oil markets in the Europe countries and Middle East countries. They started raising the oil prices. Now, due to war kind of scenarios, oil is at a really high, not very high, but has been stable. So all these oil companies have been doing really, really well in the past 2 years, and will continue to do well in the next 2 years as well, until the oil demand is really low, or until there is kind of an agreement between all these governments and then companies to really fix the oil price.
Right. Okay.
So that kind of, until those kind of really problems come, the oil companies will make really good profits.
Okay.
And there's one more problem that is there in Europe. So people generally, most of the companies, oil companies in Europe, they extract oil in Finland, Netherlands,
Okay.
all these North Arctic Ocean extractions,
Okay.
and then Middle East companies who extract from Middle East and sell, and then Russia.
Okay.
Russia is one of the largest providers of oil and gas to Europe and to the other part of Asia and so on. So if you say that companies cannot buy from these companies, then they have to go to these Arctic and US companies to get oil from them.
Right.
And so what the governments are doing is they are introducing some kind of legislation,
Okay.
like anti-profiteering rules.
Okay.
So since oil prices are high and these companies are making too much profits, so they are charging like extra 5% tax or extra 10% tax with oil companies.
Oh.
But in spite of that rules, oil companies are still healthy. They have a lot of cash, and their demand for the product is high because the consumer industry is going strong.
Right.
So the US consumers, and the inflation is high means people are willing to spend more, willing to travel more, willing to use buy air tickets and travel on. So the oil demand will keep on going for some more time, and until the inflation is down. So now the current inflation is like 5 to 7% in the US, more than 5% in UK and Europe. So, and then more than 5% in Asia as well, in some countries as us, like us. So as long as inflation is there, so we don't have to worry about it. When inflation goes to 0 or 2%, 1%, probably people will start cutting down. So because of high interest rates charged by the treasuries and governments, so the oil industry, then we have to rethink what kind of the effect it has on the oil industry. So until then, we don't have any problem for the next 6 to 12 months to 1 year.
All right. All right. So yeah, all these three look more or less stable: consumer sector, the health sector,
And the oil sector. So
yeah.
this top 50 will do well.
Okay.
Even if there are problems, there are other industries which are doing well. Technology. Technology doesn't do well, you can depend on it.
Oh.
That's why we go for this kind of indexing or
Got
this
it.
kind of
Diversification.
diversification.
Oh, okay.
So that way, you don't have to think about a lot.
Right.
So you are diversified, and you can plan for 2 to 3 years, and you can invest monthly and quarterly into these kind of investment and get, like, you should not invest more than 25%, 30% of your investment into these kind of things. But even if you go to up to 50%, it's fine. So they are the largest global companies, and they have a good exposure. And the one advantage you get is the stability of the US dollar. If your local currency is depreciating a lot, like the currencies of India, Japan, or any other country are depreciating compared to the US. So these US companies they make their revenues in US dollars. So you get the benefit of that as well.
Yeah.
And these companies give a lot of dividends. So Cisco and a lot of networking companies, oil companies give a lot of dividends.
Right.
So as long as when you invest in the mutual funds, the dividends that you get are reinvested into, again, buying those stocks.
Right.
So it is kind of has an extra compounding effect as well. So that way also it has a lot of advantages.
Yeah. Okay, that's interesting. So yeah, this episode we talked about Mirae Top 50 S&P 500 mutual fund and ETF, and we also talked about what is happening right now in the consumer sector, health sector, and oil sector, and what we can expect in the next 1 year or more. So yeah, that's all for today, and we'll see you all in the next episode. Hey, thanks for listening to Bob and Tag Talk. Please consider following us on our Instagram and Facebook pages. We put out weekly summaries of the topics discussed on the podcast. And if you found this episode informative, please like, share, and subscribe.